These are the best high-yield savings accounts we found for you this month, and one of them even pays 5%. Hello, member super savers and bond course fans. I hope you're healthy and well. In our last video, linked below in the first pinned comment for those of you who may be interested, we talked about the top FDIC and NCUA insured CDs. In today's video, we're going to focus on the top high-yield savings accounts we found this month for those of you who want more flexibility with your cash without giving up on safety. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. Evergreen Wealth. As I touched upon briefly at the beginning of this video, the top high-yield savings account we have for you today has a 5% APY. It's with Evergreen Wealth, and there is a $25,000 minimum opening deposit required. If you have less than $25,000, no worries. The next high-yield savings accounts on our list have lower to no minimum balances, but this also means somewhat lower rates. So let's get through Evergreen Wealth's top 5% high-yield savings account rate first, because this is an interesting one in our mind, especially for those of you who have a bit more excess cash to park away. In addition to the $25,000 minimum opening deposit, to qualify for this 5% APY on Evergreen Wealth's high-yield savings account, you will need to open an Evergreen Wealth checking account as well. The Evergreen Wealth checking account currently earns a variable 4% APY and may change at any time. Rates on most checking and savings accounts are variable and subject to change at any time, so nothing out of the ordinary here. What is out of the ordinary is the high APY that Evergreen Wealth offers on both their savings and checking accounts in the current environment. What's the catch, right? Well, first, Evergreen Wealth is a relative newcomer. Founded in 2023, the company is headquartered in Raleigh, North Carolina. They are a registered investment advisor that focuses on two factors: tax optimizing investment strategies and deeper diversification. Its founder, Bill Harris, previously served as CEO of PayPal and Intuit. He also founded Personal Capital, an investment firm he grew to $23 billion in assets under management. And second, Evergreen Wealth Corporation is a financial technology company, not a bank. Banking services, including the Evergreen high-yield checking and savings accounts, are provided by Coastal Community Bank, member FDIC. Deposits are FDIC insured up to $250,000 per depositor through pass-through insurance at Coastal Community Bank, member FDIC, if certain conditions have been met. So, this is a somewhat more complex construct about where the deposits ultimately lie, and you do need to be comfortable with this. That said, Evergreen Wealth is not unique in this sense. In fact, Coastal Community Bank, founded in 1997 and based in Everett, Washington, appears to have a similar relationship with other financial technology companies. We actually keep some savings in another fintech company that also partners with Coastal Community Bank, and over the past 5 years or so, we haven't really had any issues. And for those of you familiar with robo-advisor Wealthfront, they also follow a similar approach. Wealthfront offers a cash account, which, as an aside, pays 4% APY currently. You can even boost this up to 4.5% for 3 months if you refer a friend. Wealthfront is also not a bank and works with partner banks to provide FDIC insurance. But back to Evergreen Wealth and their 5% APY high-yield savings account. From what we could find on their website, Evergreen Wealth's focus is primarily on their advisory business. They welcome new clients into advised relationships via their personal portfolio product with a minimum investment of $250,000. And this 5% APY high-yield savings account seems to be their first step in acquiring new customers, who will then eventually, or hopefully, become advisory clients. Your Evergreen relationship starts with a high-yield checking account with a debit card and a high-yield savings account. A tax-optimized brokerage account, traditional IRA, and Roth IRA are available with our investment product. Drop a comment below. Do you have any experience with Evergreen Wealth? Or would you consider checking out this company? Evergreen Wealth may not be for everyone, but this is a new company that we may do a deeper dive into at a later date if there's enough interest in our community. In any case, let's move on to the next top high-yield savings account on our list, with a much lower minimum deposit requirement than Evergreen Wealth's steep $25,000. It also has a much more straightforward setup and has been a regular in our videos for quite some time, and it still holds a top spot this month. Axos Bank. Axos is offering 4.66% on their Axos One account. This was at 4.86% for much of last year, even as the Fed and other banks lowered their rates. So let's see if this 4.66% here will also stay more or less steady this year. Do note that the Axos One account only works as a savings and checking bundle, meaning you have to have both a savings and a checking account with them. So the same principle as for Evergreen Wealth, but with significantly lower rates on the checking account. Get up to 4.66% APY on savings and 0.51% APY on checking when you meet requirements. Plus, no monthly maintenance fees, minimum balance, account opening, or overdraft fees. And it appears that there are two ways you can meet the requirements in your Axos One checking account. Option 1 is to receive at least $1,500 in total monthly qualifying direct deposits and maintain an average daily balance of more than $1,500. Option 2 is to receive at least $5,000 in total monthly qualifying deposits and maintain an average daily balance of more than $5,000. Now, this does confuse me because why would you choose option 2 if you didn't have to? From what we could see, the 4.66% advertised rate was the same regardless of whether you went with the $1,500 option or the $5,000 option. I do know that for as long as we've been looking at this Axos rate since last year, option 1, the $1,500 option, was the one that was quoted on their website, and there was no option 2 as far as I can remember. So I'm not sure if this may be a first indication that Axos might be moving to a tiered option. I know some of you are with Axos, so please do drop a comment below if you have any feedback on this. In any case, I've linked this page in the first pinned comment below for your convenience. And let's move on now to the next bank on our list. Pi Bank. Pi Bank, which has also made regular appearances on our list of top high-yield savings accounts in recent months, is offering a savings account at 4.6% APY. There are no fees and no minimum balance. If we go back to their website and click on who we are, we can see that Pi Bank is a brand of Intercredit Bank N.A., a Miami-based bank established in 1992. If you want to pause and read through the rest of this, what this blurb appears to indicate is that Pi Bank is FDIC insured via its parent Intercredit Bank N.A., which is the case as you can see here from the FDIC's website. And in case you're wondering why it says 1984 here, rather than 1992 like on Pi Bank's website, the answer is that Intercredit Bank went through a name change. It was first founded and FDIC insured as Unibank N.A. in 1984, and the FDIC has kept the original 1984 date in its files despite some name changes in between. As with Evergreen Wealth and Axos, we personally have no experience or affiliation with Pi Bank, so if any of you do, please feel free to leave your comments below. Also leave a comment below if you have any great offers that we haven't covered today. Please note that all the rates we've talked about in this video are as of the time of this taping and subject to change. So if you do decide to move ahead with any of the financial institutions that we've discussed today, please do refer to the links in the first pinned comment below for the most current details on rates, minimum balances, fees, and so on. And if you live in a high income tax state and don't need immediate access to your savings, it may make sense to compare the high-yield savings account rates you're considering with T-bill rates because interest earned on high-yield savings accounts is fully taxable, whereas interest earned on T-bills is only taxable at the federal level, but exempt from taxes at state and local levels. As a point of reference, here's where Treasuries stand at the current time. All right, members, super savers, and Bond Course fans, so I hope you enjoyed this video and learned something new. And if the rates in this video have convinced you to take a closer look at T-bills or even longer dated treasuries to lock in some of the current rates while they are still attractive, then check out this video here on our bond courses. Use coupon code BONDS2025 to get an additional 10% off of a popular bond course bundle before the end of May. The 10% coupon code BONDS2025 can also be used to purchase Bond Beginners or Bond Masters individually. I've linked all the details on our bond courses and our YouTube Super Saver membership below this video for your convenience. See you again very soon with more brand new wealth building content for your financial journey.